And basically what happens is that SARS wants a portion of whatever money you're making. And it's funny because it's one of the case laws where it says SARS doesn't really care how you make your money as long as you pay tax. But let's not get into it.
My name is Nobuhle Khumalo and I'm a personal finance creator. Some of the videos I've made include how to buy shares, top 10 affordable cars, how to file your taxes, side hustles, interviews, you name it, I've done it. Note, these videos do not constitute financial advice. My aim is to plant the idea, it's up to you to water it. And if you enjoy my content, please tip me with a like, comment, and subscription.
There's that one morning where the whole of South Africa basically woke up to bank notifications from SARS because they had gotten tax refunds. And unfortunately, I was not one of those people. So I was very sad to not have received money in my account. But you might have been too. So let me explain why this might have happened. Or if you did get the refund, let me explain to you why you deserve that money. Because I know some people are like, can I actually touch this money? What if SARS wants it back? So sit back, relax, and let's enjoy this video. So I'm going to do this video in 3 easy steps. The first one is that I'm going to explain to you how the South African tax system works. Secondly, I'm going to give you scenarios or an example of how you may have gotten a refund or what type of people can expect a refund. And then lastly, I will be giving you additional tools that you may use should you need additional help. So the way that the South African tax system works is quite complex, and to be quite honest, some of us study this for many years and we still get a bit caught up every now and again. So just to simplify it, as an individual, you and I will be taxed according to the South African tax tables. These tables basically have brackets saying if you earn within this range, you'll be taxed this much. If you earn within this range, you'll be taxed this much. This is why there are sometimes those running jokes where people are like, you're not in my tax bracket. It just means that you and I are not earning within the same bracket, so yeah. And just so you know, these tax tables do change every single year, so it's important that even if you're watching this video, just make sure that you are using the correct tax table depending on whatever year it is. And when I speak of year assessments, I don't want to complicate it too much, but you must realize SARS does not use January to December as a year. I don't know why. For some reason they want to use the 1st of March as the beginning of the year, and then it ends on the 28th of Feb the following year. So it's still 12 months, it just doesn't begin in January. So because SARS uses these tax tables, they will usually try and estimate at the beginning of the year how much you as an individual should pay them. So for example, they will look at your employment contract. Not really, your employer actually kind of discloses it to them, and SARS will say, okay, if this person is earning this much for the year, they should be paying this much every month, and so on and so forth. Usually you will not actually physically pay SARS because your employer will withhold the money. So you know how on your contract you have your gross versus your net. Your gross is what your company is offering you, but the net is what actually lands in your bank account. And the difference between gross and net is usually your tax amount that you actually have to pay towards SARS, as well as any medical aid, retirement policies that you may have. So in the case where you earn simple income, and by simple I mean it's probably from one person, your employer, and you can determine, like, it's a consistent amount every single month, you're earning the same amount. You might have a promotion along the way, but it's constant. It doesn't fluctuate. In such cases, you will usually be auto-assessed, which is automatically assessed by SARS, because basically they know what you earn. There isn't much room for fluctuations, so they can actually calculate your thing for you. And in cases where they have taken more money than they should have, they will then issue you a refund. Just to note, South Africa has one of the most sophisticated tax systems, so usually their calculations are correct. However, it is still up to you. It is your responsibility to actually check whatever they've automatically assessed, and you can accept or decline if you have an issue. But just be aware that sometimes if you do decline and you want to go and argue with them, you may end up actually owing them. So it can go either way. You can get a refund or you can owe them more. It's just up to how they actually investigate. All right, so the following scenarios may result in you getting a tax refund. Either you are a new hire this year, so you started a new job, or you started working for the first time, or you might have done a bit of months of vac work, so you didn't really do a full 12 months of working. You could get a refund. The second scenario is if you had a change in job / change in salary, but this is usually like if you're going to get a demotion, which I doubt you're going to do, okay? But even with the promotion, you never know, you could still get your refund because maybe they were taxing you at a higher bracket than they should have. All right, and then lastly, if you are a provisional taxpayer. With the provisional taxpayer, guys, I don't want to go into too much detail about this because I don't know if it will apply to a lot of of you. But provisional taxpayers are usually people who do not earn a consistent income. So they don't really earn a salary. They could be earning 5 million one month and 2,000 rand the next month. And these are people like artists, your influencers, your people who earn commission, salespeople. Like, it's just people who don't really know how much they're going to get in their bank until it's in the bank. So what happens is SARS really can't kind of like make an estimate of how much you're going to make for the whole year. So what they do is they ask you to file with them every 6 months. So if you're a provisional taxpayer and you're not really sure what to do, or if you're working for an international company that doesn't withhold money every month, you probably need to speak to someone, a professional, just to help you sort out your tax matters. Maybe just the first time, just so you know your base, and then you can probably do it for yourself following that. All right, cool. Now back to the new hire and change in salary. Let's go through an example.
So I'm going to be going through a basic example. I'm going to use a yellow pen just so that you guys can see where I'm actually looking at. So basically on my screen, I have a basic calculation, which is this, which kind of shows you how SARS or how your tax practitioner actually calculates what you should have paid versus what you have paid, and whether you have a refund or if you owe SARS. So as mentioned earlier, you would have paid tax already throughout the year based on your employer, and your employer would have been deducting this from your salary. This is considered B, what you have already paid. And then at the end of the year, SARS will calculate what you should have actually paid. So if there is a difference between what you've already paid versus what you should have, this will determine whether you have a amount owing or a refund. If it is negative, then it is a refund, but if it's positive, you actually owe SARS. And the way this is calculated is as follows. So B, I just want to look at B, amount you've actually paid throughout the year. You'll find these on your IRP5. IRP5. This will tell you how much your employer has actually paid on your behalf. And then for what you actually should have paid, this is a calculation of your taxable income for the year, starting 1st of March up until the 28th of Feb the following year. Then they use the tax tables, and then they reduce this amount by any rebates. So rebates are just like deductions that the government or SARS gives to us, and I'm just going to refer back to this table. So as you can see, these are our tax tables, like I said, and these are the brackets where you see where you earn, and then it kind of tells you how you'll be taxed. And then the rebates are as follows. These will also change every single year. So because we are looking at 2023, we will be looking at these rebates. Most of us will be getting rebates, primary rebates, because we are under the age of 65. However, if you are doing your tax return for your parents or your grandparents, you have this additional amount. So individuals, you and me, we get 15, no, actually, wrong column. We will get 16,000, but then my grandparents will get an additional 9,000. And then if they're over 75, they'll get an additional 3,000, almost 3,000. So basically they get more and more allowances the older they are. Cool. So when calculating this, you'll see that these rebates actually reduce the tax that you should have paid. And this is how a lot of people end up getting refunds. So let's work through an example. You can take a screenshot of this so far. Yeah, you can take a screenshot of this. All right, for example 1, I'm looking at a VAC student or someone who's worked from the 1st of January. And basically these are people who have not worked a full 12 months, so less than 12 months. And for this example, I'd say you've earned 20,000 Rand, basically 10,000 Rand per month, and you've only worked 2 months, right? And your employer would have withheld 18%, and where we got this 18% is actually from the tax tables. If you scroll back up here, I'll show you. Because you're only going to earn an amount of 20,000 Rand, this is actually what they would have used to calculate. Because basically your taxable income for the year is only 20,000 Rand because you're only working 2 months. And then tax per the tables would have been 20,000 times 18,000, which is the same, so 3,600. Great stuff. But then your rebate, you get a rebate. SARS gives you this rebate like we discussed. Because you're an individual, you'll get minus 16,425. So what happens is SARS says, okay,
I agree that you should have paid 3,600 Rand tax, but I'm going to give you a deduction just for free because you're an individual of 16,000 Rand, and that puts you to a negative 12,000. So this is actually capped to zero. So SARS is not going to pay you 12,000 Rand, just because they gave you this free deduction. It's a deduction, but it will be capped to zero. You cannot go further than that, which basically means that you should have actually not paid any tax. So your actual tax as per SARS is 0. So when you do the calculation, you say A minus B. So your actual tax per SARS, which is this 0 that they've kept, minus what you've actually paid, what your employer withheld, which is this 3,600, will give you a refund of negative 3,600. So you will get this into your bank account because you should not have paid. Okay. And that is a refund. This is if you have received a promotion. So let's say you receive a promotion in December and your salary goes from, so initially you were earning 250,000 Rand per annum. And now you are being bumped up to 400,000 Rand per annum. Congratulations. So this, let me just calculate how much this is per month. So this increases, so it's about 20,000 Rand per month, and then it increases to about 33,000 Rand per month. Cool. So I've just drawn a bit of a timeline here to show us our tax year starts on the 1st of March and ends on the 28th of Feb. And you get your promotion on the 1st of December. Right. Which means you have 9 months where you're earning the 250. And then you have 3 months where you're earning 400K. But it's not actually 400K. You'll see how we split it. Okay, cool. So when your employer calculates how much they need to withhold, they'll split it up. They'll do the first 9 months and then they'll do the 3 months. Okay, because these are different salaries, and if you go back to our tax tables, you will see that they fall under 2 different brackets. So when you were earning 200,000, I'll just make my pen red this time. You were earning here for the first 9 months. No, you were earning 250. Sorry. You were earning here because you're earning R250K. And then now you are actually here. You move here because you're earning 400K. Right. So you jump brackets. So for the first 9 months at 250K, you would have earned in that bracket I just showed you, and you'll calculate. Basically, there is a standard amount. So everyone who earns in that bracket will pay this 40,000 Rand. It's standard. And then you'll pay an additional 26% of any amount that is above the 226. So this is like the lower range of that bracket. This is just some basic maths. You can check my maths if you want to. Let me know if I've done anything wrong. And basically you will get to an amount of 46,000 Rand 920, which is the total tax that you should pay per year if you're earning 250K. So then we divide this by 12 to get us 3,900 each month. Okay. And because we only earned this 250K for 9 months, I'm going to multiply it by 9 months. And this gives us 35,190 that your employer or your company would have already withheld from your salary. So you've paid this already. Paid. Okay. Then for the last 3 months, when you move to 400K, you change brackets. So you see how the fixed amount is now 73,000, whereas initially it was 4680. Now it's 73,726. It's a massive jump. And then an additional 31% of any amount that's over this lower range now of this bracket. Simple maths again. And then you end up at 88,000 Rand 265 per year. And we divide it by 12 again because we didn't earn this for the full 12 months. And we get to an amount of 7,000 Rand per month. The jump is quite high. You see, you had 3,900 here each month, and now we had 7,300 per month. Anyways, you worked 3 months under this new role. So the actual amount that was withheld by your employer is this 22,066. So now what you do is you take this amount that you've paid plus this amount that you've paid. Let me just put paid here as well. Sorry for the wrong colors. And then basically what the total that you have actually paid for this year is this 35,190 and this 2206, and it gives you an amount of 57,256. So this is what you have actually paid. B, okay? B, actually paid. Actual paid. Then we look at what your actual taxable income. So now this is when SARS is calculating for themselves. They're like, oh my word, how much did this person actually pay? So basically, if we say your 250k that you were earning initially was only for 9 months, and then the 400k was actually only for 3 months. This is actually meant to be 100k. So technically, you only earn 287,000 rand for the year. If we look at 287,500 as per the tax tables, you will actually get this calculation. You'll still use this fixed amount of 40,000, but the 26% portion is what changes, and you end up with an amount of 56,670 that you should have paid. This is what SARS wants. SARS wants this amount. You're going to take what you paid versus what SARS wants, and you see that you actually end up sitting with a refund of 586. It's not a lot, okay, but this is just an example. But I hope that this helps explain to you why you may or may not have received a refund. I'm sorry that this calculation is so tiny right now, but always remember this is the basic framework. Basically calculate what you've paid, what you should have paid, remove the rebates, and see whether you have a refund or a payable. Good luck. Alright, and then lastly, should you need any additional help, I would recommend that you actually head over to the SARS website. It is quite user-friendly and they have a lot going on there, a lot of articles that might help you. Or you can check out the SARS YouTube channel. I love that they did that because I'm a visual learner. I usually enjoy seeing things, so maybe that might help you. I also have a video where I've actually done a demonstration of how to file your tax returns. But if you do not win with any of those three, do check out the links in my description box, because maybe you need to get an actual tax practitioner to look through your files. And remember, they must be registered, guys. Do not just go to these random people that promise you refunds, because the golden rule is that you just want to be tax compliant. Do not push to get a tax refund, just push to be tax compliant, because sometimes you might go to these people, these tax people who claim that they can get you a refund, a guaranteed refund, and then what actually happens is they end up manipulating some of your accounting things. So you might benefit from tax refunds for like the first 5 years and you think you're living large, but actually these people are actually committing a crime in your name, and you will pay the price. Maybe not today, maybe not this year, but you will eventually. So just be safe out there and good luck.
If you enjoyed this video, please tip me with a like, comment, and subscription.